Hello and welcome to News Desk. Today, JoyBusiness is organizing a financial services forum at the Tank Palace Hotel. Philip Namfuri is standing by.
And welcome to the JoyBusiness Financial Services Forum, coming to you live from the Tank Palace Airport, right here in Accra. Today's discussion centers on the insurance industry, on the theme, recapitalizing for growth. Is it a panacea for expansion, penetration, and big business underwriting? That's the key question. My name is Philip Namfuri, and we'll be taking you through this discussion, starting off first with something from the Commissioner of Insurance, Justice Yaufori. Then we'll have our guest speaker, and the discussions will follow after that. But first and foremost, the insurance industry. I mean, last year we saw what happened with the banking industry. We saw the rush to meet the minimum capital requirement of 400 million, up from 120. We're seeing the same thing happen with the insurance industry. Possible increase from 15 million to, some are arguing 50, some are saying 60. There's no definitive number yet from the regulator. We must state that. But is this going to be a panacea for the industry's troubles, for penetration? Some say 2%, some say 1.6%, and might even fall further. Because of the increase in our GDP size after the rebase in September 2018. So the insurance industry is critical, no doubt. But if you increase the minimum capital requirements, does that mean that everything is going to fall in place like we have in the banking sector? Will everything just stand straight as we do? Well, that's why we're here to discuss. We are live on Joy 99.7 FM, on JoyNews TV, and myjoyonline.com. Also on our social media handles, Facebook, JoyBusiness GH, on Twitter, JoyBusiness GH, and also Joy997 and JoyNews TV with the hashtag JoyFinanceForum. So that's what you'll be using to discuss on social media. Invite your friends, family, everybody to get involved, to tune into the TV sets, radio, and get into a computer on your phone and make sure that you are following the discussions. After banking, we're now into insurance. JoyBusiness Financial Services Forum, recapitalizing for growth. Is there a panacea for expansion, penetration, and big business underwriting? Now we're going to hear from the Commissioner of Insurance, Justice Yaufori. However, I must state that we invited the National Insurance Commission, but they declined to attend. So we have a recording of Justice Yaufori. He's the Commissioner of Insurance, with my colleague, George Rafe, and they discussed this possible increase in the minimum capital requirements. So we'll look at that, and we'll continue the discussions.
Welcome to JoyBusiness as we engage you on a lot of issues in the industry. And my first question that I wanted to ask you was, what is the status of the minimum capital requirement? It looks like Bank of Ghana has done it. The Securities and Exchange Commission, they're also doing their own. Now the attention is on the insurance sector. All other things being equal, when are we hoping that the announcement to be made that this is the new requirement?
Thank you very much. We are working on it. Coming out with a minimum capital entails a lot of things. We just can't come out with a figure. We need some empirical reasoning behind it. And that is why it's taking us some time. But we are working on it. We believe that sooner than later we will have something for you. Definitely the minimum capital is going to be, is going to go up. But I cannot be very specific with respect to how much it's going to be. We want to take into account the effect on the market. Well, we don't want to close down any insurance company. We have a lot of local insurance on the market, and we want to come out with a package that is going to be accommodative. So actually something is going to come out, but I cannot be very specific in terms of amount and the period and then the time, but it'll be sooner than later.
Some are saying that it has kept quite long, and I know that we started the discussion somewhere last year when we heard about discussions and even talking to the Ministry of Finance and all the rest, and we heard that very, very soon. I'm asking how soon that would the announcement possibly be made this year, before the close of this year, next month, or even this month?
I would say before the end of this year, because a lot of consultation comes into play. Whatever we do, we want to move the industry along. We haven't even done stakeholder consultation. I'm having a meeting tomorrow with the Ghana Insurance Association. It's all about this minimum capital. So it's not something that the commission just sits down and then comes out with a figure. We need to also do some consultation with the Ministry of Finance. We have done some consultation already. We're back to the drawing board to make sure that we fine-tune it, and then after that we would actually get the stakeholder involvement. We'll talk to the industry, let them know the way forward, and then give them an idea. We're not thinking of just coming up with an upgraded version of the minimum capital. We're also looking at how we can accommodate them. We're even thinking of having a tier system whereby those who cannot actually meet, like a three-tier system, for example, whereby those who cannot move up will be where they are, but they'll be limited to some kind of business. Those in the middle line, maybe the second tier, will also be assigned to some risk. And then those at the first tier would then probably have the opportunity of getting involved in the higher risk. As you are aware, insurance is a little different from banking. Insurance carries a lot of risk. So, and there's also lack of much confidence in insurance. Insurance is a very tough sell because insurance is something that is intangible. It's not something you can feel, like going to the shop and buying a shoe. It's based on a promise to pay you in future when you experience the unexpected. So whatever we do, we also want to make sure that we don't do things to actually cause to affect the little confidence that the insurance industry is gaining so far. So, as I said, we are going to come out with something, but we have to do it right.
Would your engagement with the insurance companies be the last round of engagement before the announcement is made, or it's just started? Because I knew that you had some discussions already with these companies. So the one that you're going to have with them this week or next week, will it be the final round of industry engagement with those who matter? Because the insurance companies should be the final leg of engagement, or even the first leg of engagement in whatever that you have decided to do.
It's very difficult to say that it's going to be the last leg.
Or will it be the first leg?
It could be the first, it could be anything, because you start one movement and something else comes up and you have to go back. It's a very sensitive thing, and you want to get it right. The industry is aware that something is going to happen. The only thing that is lacking is the exact figure, and then the modality, the grace period, I mean, the time within which they are allowed to actually recapitalize. All these things, we need to get some input from them, because they are the people we regulate. We are there for them. First of all, we are there to protect the policyholder, and then secondly, we want to build a very strong industry. And we can't build a strong industry when we don't get them involved.
But some will say that the back stops with the regulator, that you've been in the industry before, and often players will always want to come up with an excuse. A typical example is where the Ghana Revenue Authority is arguing that they wanted to introduce the tax stamp, and every day this thing should have started way before this year. Firms came up with excuse, and at a point in time they said that they are going ahead because those who have also invested in the machines thought that then we are not going to do it because you cannot compel the rest. I mean, you have a fair idea that within 1 year you should be able to recapitalize, so that even if we settle on X amount of money by November, by the close of the middle of next year or November 2019, you should have met this capital.
Yeah, I know. Definitely, from where I sit, people always come with excuses, but they also come in with very good ideas. So we are ready to listen to the excuses and also listen to the good ideas they bring on board, and then we'll make a decision. We will take a firm decision on the way forward.
They are proposed, some industry players are talking about some 50 million Ghana cedis. Is that something that is being considered?
Yeah, it's something we're thinking that it could be around that figure or above, but we are discussing it. I'm not very much firm yet, because, as I said, there are a lot of stakeholders involved, and they have to make sure that you are not actually bringing up a capital requirement that is not easily that cannot be afforded, or too small. So there's a lot of reasoning that goes into it, and as I said, you need empirical basis for any figure that you come out with.
Mr. Foyami, some will say that 50 million or even 100 million for any player who wants to play in this market should be prepared for that one.
Yeah, I believe so. We take risk, and if you say you want to take risk, you should be very much well capitalized to actually instill some confidence in the person going to buy insurance from you. So I believe that a very good, solid capital requirement is very necessary, but we have to take into account the local companies who are not strong like the foreign ones. So we need a blend of the two. We need to have a place for the local industry as well as the foreign
so at least
investors.
Yeah. For now, 50 is on the consideration on the table.
I wouldn't say it is, but it's a figure I wouldn't mind looking at.
Or 100 million.
It could be somewhere between 50 and 100. Yeah.
And we're looking at possibly having a 1-year period to make that. Possibly, I mean, initial proposals.
Yeah, possibly 1 year or less. It all depends because we are going to give them time to grow. And if it comes out to be a tier system, then at least you can be where you are for the time being. Nobody's kicking you out of the market. You still have the room to operate. And you have time to elevate yourself to maybe the second tier or the first tier. So we don't think that there's a need to actually give too much time because everyone will still be operational.
You've been in the industry before, and now you have a bigger picture and looking at things in the sector. Are you satisfied with developments in the insurance sector?
I'm satisfied to an extent, but I think more needs to be done. The industry has come a long way.
Insurance is a tough sell, no doubt, and the onus is on the regulator, on us to make sure that this industry is robust and is well tailored to meet the needs of individuals in the country. And just before I introduce my guest speaker, an important thing came up, the tiered system of the minimum capital requirement. We saw the same thing with the banking industry, and the argument from the regulator was if you can't meet the 400, step down to savings and loans, etc., because it was already tiered. But with the insurance, if you are stepping down from 15 million, I don't know where you would go in, but let's see what comes up from the regulator as to exactly how much, because it's a key figure, and like he said, empirical evidence to support an increase, because more often than not, the uneducated will assume that the regulators or the players just sit down somewhere and then come up with a figure, and that's what they introduce, like what we saw in the banking sector. And there's mostly the argument that there's nothing really tied to this. Well, today you have the opportunity, guests and participants, to dispel that notion and educate all of us as to if indeed it was going to 50 million. I know no one here is a regulator, but if indeed it's going to 50 million, what goes into this? What comes out of this? Why do we have to go from 15 to 50 and not 30 and not 40, not 50? Somebody may not understand this, but it's up to all of us to explain. This is the JoyBusiness Financial Services Forum, focused on the insurance industry on the theme recapitalizing for growth. Is it a panacea for expansion, penetration, and big business underwriting? We are live on Joy 99.7, on the JoyNews channel, and myjoyonline.com. Social media handles JoyBusiness GH, Facebook, JoyBusiness GH on Twitter, also JoyNews TV on Twitter, and Joy997 also on Twitter. The hashtag is Joy Finance Forum. Now, our guest speaker needs no introduction. He's a man of men. His name, Kwarteng, is the Honorable Minister of Finance, Deputy Minister of Finance. He's going to share something with us. Honorable Minister, please do so. Thank you very much.
Thank you very much. Mr. Chairman, Group Executive Chairman of the Multimedia Group, members of the insurance fraternity, ladies and gentlemen. It is with utmost pleasure to be invited to be part of this JoyBusiness Financial Services Forum. I'm very happy that this year's Business Forum focuses primarily on the development of the insurance industry. And I like the topic. Recapitalization to grow. Is it a solution? Well, as government, we back our regulators. And on this occasion, we do, particularly when they are in discussions with us. But I think we all agree that the balance between, on the one hand, creating a credible insurance industry, and on the other hand, ensuring that our indigenous participants continue to remain in business would have to be considered carefully. We're confident, especially looking at the discussions the regulator is having with us, that we will get this balance right. Insurance continues to play a pivotal role in the development agenda of countries worldwide. It serves as a source of refuge in times of disaster and a tool for wealth creation for the financial growth of citizens. Permit me to mention some of the positive developments in the insurance subsector for the year 2018. While total assets of the insurance industry grew by 14% to 6 billion Ghana cedis, the life sector recorded a growth of 10%, whilst the non-life sector grew by some 18%. Reinsurance also grew by 22%, and the sector generated employment, I understand, for some 12,500 people, and this figure is expected to increase. The penetration rate, which is currently below 2%, needs to be substantially improved to enable insurance to play its expected role in the economy. In developing countries, penetration rates are below 15%, and indeed, insurance companies own most of the banks. Unfortunately, I'll take that again. I think I missed it up. In developed countries, penetration rates are above 15%, and indeed, insurance companies own most of the banks. Unfortunately, the reverse is the case in Ghana's economy. To enable the sector improve its penetration, the industry must not only emphasize on recapitalization, but also improve its corporate governance and risk management culture. Insurance companies must be adequately capitalized to ensure that they are strong, efficient, and profitable. Poorly capitalized companies are unlikely to handle huge transactions, especially in the emerging oil and gas sectors. As part of Ghana's financial sector policy initiatives, and as we stated in the 2018 budget and economic statement, government is undertaking pensions and insurance sector reforms aimed at directing funds in these sectors through the capital market for efficient utilization and development. This will position the insurance sector as one of the major institutional investors on the Ghana Stock Exchange. It will also enable banks to have access to long-term funds by channeling structured short-term funds through the capital market. Government, working with our development partners, has developed a national fiscal inclusion strategy aimed at increasing access to formal financial services for adult population from the current 58% to 75% by 2023. Given the diverse nature of financial services, the strategy will focus on highly excluded groups, including rural residents, women, youth, and the poorest quartile of the population. The financial inclusion strategy would serve as a key driver to the development of an ecosystem of financial service providers and the use of technologically driven delivery channels that will serve consumers well. The recapitalization effort must therefore be merged with product development initiatives such as micro-insurance for the informal sector. Distinguished ladies and gentlemen, I believe we were all witnesses to the events that unfolded in the banking sector. Government has had to take certain difficult but crucial decisions, not only to protect people's investments, but also to reduce the job losses that would have been occasioned by these unprecedented challenges in our banking sector. The insurance industry, being part of the financial sector, is not entirely immune from the troubles that affected the banking sector. I will therefore urge both managers and shareholders of insurance companies to uphold the highest standards of ethical conduct in all their operations. I have absolute confidence in the National Insurance Commission to crack the whip in order to maintain compliance in the event of any breach of statutory regulations or unethical conduct. Ladies and gentlemen, I wish to reiterate government's commitment to empowering the private sector by creating the enabling and friendly business environment in order to attract the needed investments that will accelerate the growth of the Ghanaian economy. I'm hopeful that deliberations at this forum would not only provide a platform for discussion of topical issues, but will serve as a useful means of providing relevant input for the development of the insurance industry. I thank you all very much.
Thank you very much, Honorable Deputy Minister of Finance, Mr. Kwarteng. You're still live on Joy 99.7 FM, JoyNews TV, and myjoyonline.com. On our social media handles, Facebook, JoyBusiness GH, on Twitter, JoyBusiness GH, Joy997, and JoyNews TV. Now, most importantly, from what the Deputy Minister of Finance said, government backs the position of the National Insurance Commission. Very key, very important to advancement of the financial sector. If there was no government backing from the banking sector, we would have seen a complete mess of events. As we've seen in the budget, 2019 budget, the cost it involved, that's the explicit cost. There was also the implicit cost. And from the Commissioner's statements before, they don't want to see local companies go down under. As we are all well aware, the insurance industry has had some influx of foreign institutions in years past, and they don't want to see an insurance industry where local participants will not have legs to stand. An important thing the Deputy Minister also said, the penetration rates, as we've seen in other developed markets, and practitioners here will bear witness, very, very key, very important of how insurance markets in other parts of the world move the financial markets. In our country, or in our part of the world, we see the reverse, where there's not a lot of investable funds for other parts, be it the stock market or the bond market. But the life insurance particularly can support this in a very rigorous way, and we've heard the Deputy Minister allude to that. Also, the National Fiscal Inclusion Strategy. Government is committed, and particularly since 2000, and I don't quite remember, but I've seen a lot of governments come in with aims at improving the financial services industry. We saw the reforms in the pensions industry in 2008. We've seen banking sector reforms very recently, and now we are seeing insurance reforms. So I think it's critically important that this is done. And once government gives this backing, then all is well and good. But most importantly, not just recapitalizing for the sake of recapitalization. We heard the Deputy Minister talk about balance. It's important. We don't want to destabilize an already susceptible industry where people don't have a lot of confidence. People don't sign on to insurance. Motor insurance, just because the police might stop you. If it was left with a lot of people, they would not sign on to motor insurance. And we all know, life insurance, even though it's growing, there are a lot of people out there. Informal sector, a lot of people out there. People just don't see the value of the insurance. So apart from recapitalizing, he mentions governance, he mentions risk management. As you take on more big business, you must match this with your capital and make sure that all is well and good. So this is the Joy Business Financial Services Forum coming to you from the Tang Palace Hotel. Now I'm going to introduce my guest to you. I'll start with George Wafi. He's going to be our moderator. He's an editor, assistant editor at JoyBusiness Desk in the multimedia firm. We also have Mr. Robert Jato. He's a senior manager of strategy and operations with KPMG Auditing Powerhouse. We also have Mr. Nsia Free. He's an insurance broker and he's representing the Ghana Insurance Brokers Association, that's GEBA. And finally, we have Mr. Simon Davo. He's an insurance consultant and a former Deputy Commissioner of Insurance for about 7 years, I beg your pardon, 2010, 2017. So these are the gentlemen that are going to take us through. If you can give them a round of applause, I'll be very grateful to you. Thank you very much.
And a round of applause for my colleague Philip Nanfuri. Interesting discussion. You know, often it's said that big is beautiful, but sometimes it can be ugly. Do we really need enough capital for the industry? Can we have a tier system and let everybody play in his or her space or its space? So is it more of a one-size-fits-all or not? Honorable Deputy Minister of Finance, Kwarteng, thank you so much for your presence. He's also a member of Parliament as well, and he will leave in the middle of the program, but we will let him answer some few questions for us before he says goodbye to us, because he had to take time off his very busy schedule. He's now the, can I call it the acting finance minister now, or not? Because the other two are out of the country. So a lot of things on his table to deal with, but he agreed to spend some quality time with us before he steps out of this program. So we have Robert Jato. He's a senior manager, strategy and operations at accounting firm KPMG. Also, Mr. Nsia Free, he's an insurance broker representing the Ghana Insurance Brokers Association. And who doesn't know Mr. Simon Davo? He was with the National Insurance Commission. So before we start this whole discussion, remember that we are live on Joy FM, we are live on multi-TV, JoyNews channel, and also you're streaming live on myjoyonline.com. Well, if you're not here, the power of the internet, you can still participate in this discussion. Remember, Facebook is JoyBusiness GH, on Twitter is JoyBusiness GH, and also Joy997, and also hashtag the Joy Financial Services Forum to just throw in your questions for any of these distinguished panel who are gathered here. So let's first have some opening comments from. Let me start with Mr. Simon Davo, who's been there from the perspective of the regulator when it's needed for the capital. But let me first have your opening remarks first. It's a few minutes, 2 minutes, 3 minutes, and then we set the discussion. So the mic is over there, Mr. Simon Davo. Anything that you want to share with us with respect to this whole recapitalization?
Yeah, thank you. George, thank you very much. Yes, I can only say a few things for now, but if the questions come, we shall answer them the way we deem fit and how we can promote our industry. Yes, I would say that the time is ripe now for us to think of increasing our capital again, though in the end we can say that increasing the capital alone is not sufficient. That will not solve the problem for us, because we can even increase the capital to 500 million beyond the bank's level. But if there are some ills in the industry, if they are not solved, the purpose of growth and increasing and improving the penetration, I'm sure we cannot achieve it. But what I want to say is that the time is right for capital increase, because what the Commission needs to do, the level it should be in terms of capacity, I'm sure they've gotten to some level. They've managed to improve their prudential and financial reporting requirements. They are now in the process of implementing the risk-based approach to supervision, where they will relate the capital to your levels of business. All those things are in place now. So if they are coming out with a capital level, so meaning they are trying to relate the level of your liabilities you are carrying in your books to the level of capital that you need to absorb those levels. It is because, from what I know, our insurance industry is not profitable. If I'm not mistaken, the capital level that will be increased, it may be used to absorb losses. Because I can say that for the past 7 years, the industry, there is the need to do a lot for insurance industries to move from the loss-making to profit-making before the capital can grow. And at that level, they can now think of carrying on bigger businesses where the income can come. Other than that, the capital will come, the problem will still be there. It is something we need to look at seriously. The other issue I want to also say is that if we are not careful, the capital we are going to increase may also be used to improve the reserving problems. If I say reserving, those insurance industries, they know what I'm talking about. If you actually know their database and the level of reserving they are carrying in their books to support the liabilities, from afar, you can see that there is a lot more to be done. Because if the books are clean and the levels are clear, you can see that the level of reserves you have in the books will not be sufficient to carry your liabilities. So your capital may come, but it will also go further to just improve and cushion your reserves. And the purpose of increasing it for growth and for penetration, it will not be reached. But I can say that the capital, we have to do it before the penetration and the growth can be realized. As everybody keeps saying, we are in the informal sector, the insurance sector. Those who are having insurance policies, they are very few in the formal sector. We have to go into the informal sector. But the issue is that informal sector, if we want to improve the penetration, we need to come out with some levels. Will the ordinary insurance companies will be allowed to go into the microinsurance sector where we hope it can reach out to the rural population for the penetration to improve. If that is not possible, do we have to go the bank's way, where we license separate companies like microinsurance companies with smaller capital levels who can go into such sectors, but with the experience from the banking sector, where they go into microfinance and small things and they've burned their fingers. All of them are collapsing, they are not doing well. It is from experience, so which we may not even encourage for now to license them to just go to microinsurance to improve their penetration. If that is not possible, then we should be thinking of raising the capital levels of the current companies so that they can both combine the conventional product with the microinsurance product to increase the penetration. So capital requirements, it is needed, but whether we should match it to risk-based so that no matter what you provide, the level of liability you want to carry, you'll be allowed to have the capital level that will support it. Or the blanket type, whether you are big, you are small, you need one level of capital, it is something we can debate and come with a solution. Thank you.
Thank you very much, Mr. Simon Davo. Indeed, he's spoken like somebody who was at the regulatory level overseeing things. But my argument is, which one comes first? Is it more of a chicken and egg situation? Let's improve the governance issues and then do the capital, or let's do the capital first and let's deal with the governance issue. But let me bring in the brokers, those who deal directly with the people and the public. I mean, for you, whether indeed people having challenges with their premiums and payment and delays, raising the capital will address. But let me hear first your preliminary comment first.
Before I make any comment, I want to share this scenario with you. This is, I've analyzed the report from GOGIP, that is Ghana Oil and Gas Insurance Pool. Insurance industry have come together to form a company to underwrite big business. And oil and gas is supposed to be the biggest business we are undertaking right now. I'm taking just 2014 figures. In 2014, the gross premium, that is premium that was paid on oil and gas, amounted to 49,298,483 cedis. Of this, 44,269,126 cedis was repatriated. That is capital flight. 89.73% of the money generated in the country went overseas. Of this, of the 49,298,483 cedis, only 922,730 cedis was retained by insurance companies in Ghana. That is, the retention is 1.87%. Then, of this, the commission they gave to those who, the commission they gave to the brokers amounted to 3,822,858. That was 7.8%. And the claims on this huge amount that came to the country was 283,769, not even 1 million. The combined amount that was retained in the country was 10.27, which totaled 5,029,357. So you see that we generate the business in Ghana, but we're unable to retain the business. What's the reason? The reason is that we don't have the capacity to underwrite the business and retain it in the country, because the capitalization of the insurance industry is very, very, very low. So all of us should support the idea of increasing the capital. That will build financial capacity to enable us underwrite big business in Ghana and retain it. So this is what I want to share with you. So I'm in full support of this. But how we should go about it is what we need to debate or discuss so that we find a middle line that will be acceptable and that will not collapse the local indigenous companies.
Thank you very much, Mr. Nsiefri. It looks like we all agree that we need to go to Mantima and Kebi. Whether we need to go through the south to get there or the west to get there, that is where the argument is. Let me bring in Mr. Robert Jato. He's with KPMG. Just your preliminary comment. I'm told you had a presentation to me, but let's have your preliminary comment first, please.
So thank you. I think that if you listen to the figures, the debate is not about whether we should increase capital or not. And I think that's an important point to remember. Just giving you some context in terms of some other regulators who have increased capital. And regulators will always increase capital. Also, if you look at it in the context of what has happened in the banking industry, like the minister said, or the deputy minister said, we really want to make our financial system safe and sound. And that requires some level of capitalization, and that's critical. So take Malaysia, for example. In 2001, they increased their capital for insurers from 13.1 million to 26.3 million. Take Indonesia. In 2008, 4.3 million to 7.3 in 2012. Take our own context. We've increased capital from 5 million to 15 million. Now we're talking about increasing that. If you look at where we were pre-2015, it was 5 million to 15 million. That's over close to 200% increment. So if I think, or we do some back from the future thinking, almost every so often, 4 or 5 years, capital gets increased. We know in Nigeria currently for insurers there's conversation about increasing capital. In fact, that is almost kicking in. They have decided to use a tier approach. So let me make that point again, that the debate is not about whether we need capital or not. It is what is the level of capital, what is the quantity and quality of capital. But even more importantly, if we think back from the future, it will mean that we'll have this capital debate again 5 years down the line, and that would increase to a certain level. So should we move away from the compliance-based recapitalization to some risk-based capitalization? I know the former commissioner mentioned that, that there are pillars in place to make that happen, which is to say, let's tie the level of capital that any particular institution needs to its risk profile and the economic activities that it's undertaking. Those would be my preliminary thoughts.
Let me get to the Deputy Minister of Finance, and he's made his open remarks already, so I'll just shoot ahead with the questions. When you heard what Mr. Nsiefri talked about the capital flight, and when I heard that, I thought about the Ghana city. And so what can we say that, from your perspective, what is the policy direction in ensuring that whatever capital that we settle on, whatever approach we go, we protect the indigenous owners and operators? I mean, exports are improving, but the monies are going to foreign companies and not local companies.
Well, thank you. Listening to him, I rather was asking this question. So, what is your advice to government? What should the policy response be? I mean, you understand the industry far more than politicians do. And if you have this existing in the industry, we need you to advise us on what dynamics cause this and what kind of policy responses are necessary. I kind of gathered from your contribution that one of the solutions will be this increased capital. That is helpful, but I have to say we're open more to this kind of discussion because improved capital alone may not necessarily address the concerns we have. And since I may not have the opportunity to be part of this discussion for longer than I would have loved to, I have to leave for Parliament. Let me take this opportunity to also make this point. I'm gathering, it's good I came this morning, I'm gathering that perhaps the increased capital requirement for insurance will not be as acrimonious as it was for the banking sector. There appears to be quite some consensus that this definitely is necessary. And of course, as was indicated, the discussion then becomes, so how do we do it in order that we achieve the balance that I earlier on referred to? And on that point, we have mentioned that a tier system may well be the solution. I don't know. I'm not an expert in this industry. But from a common sense point of view, we should be careful the way we also create an industry in which you have the foreign players at the top tier. And then you have the indigenous companies at the lower tiers, so that necessarily the big businesses would go to the big boys anyway. And in the end, we are going to ask ourselves the question, is this what we really bargained for? Was this your objective? Was this where we wanted to go? So the discussion ought to be, in my opinion, more sensitive than perhaps a simple, straightforward question of a tier system, because that is discussed because people want to protect other people's daily bread. I mean, instead of going out of business, at least let me do some small business. But against the broader objectives of the industry, it may be something that we should consider carefully.
Honorable, because you're also going to leave, I'll come again with another question as well. In your speech, you spoke about how committed you are to the process. And I'll come back with a question again about how committed is the Finance Ministry to this whole process, because in these discussions, you have some players going behind, have this, and we knew what happened in the banking sector, even in the last minute. How committed are you to the National Insurance Commission's plan to recapitalize? And also a second one, in protecting the indigenous market as well?
Well, thank you. To demonstrate government's commitment, we need to even look back a bit. In 2007, under the previous MPP administration, we attempted in a bold way to look at the financial services sector. And that is when the discussion about government moving out of the sector and leaving the space for people to bring capital, because it is clear that the kind of development that we want for our country cannot be financed by the current capital in the financial services sector. That is very clear to me and to many other people. So we have always considered that to drive and fuel economic growth, you need to fix the financial services sector in order to have capital in the form and in manners that would support all kinds of development initiatives. And it is partly that conviction that has guided us in the way we have conducted or supported the central bank in the issues of the banking sector. We consider that insurance is part of that. And so in order that our response would be total and we can be confident that in the end we have a credible financial services sector that would deliver or fuel our development agenda, we must necessarily look at insurance. That's where we're coming from. We feel very committed, but in this we want the regulator to take the lead. We are in discussions with the regulator. I think the discussions are going well. And I'm sure the regulator will come up with, and because we are politicians, we are also sensitive to what the indigenous community in insurance feel. So we will help the regulator strike the right balance. But once that is done, government is standing behind the regulator to ensure the overall objective of these reforms are actually achieved.
And a bit about the protection of local insurance firms as well.
Well, I don't have authorization to make any commitments now, but as I said, we would think about that carefully. I mean, if you look at what has happened in the banking sector, and even though on the one hand, as we are in respect of insurance, we wanted to see a credible banking sector, clean it up, improve the capital, and therefore we supported the central bank in this. In the end, we are also there with GAT to ensure that you don't throw the baby away with the wash water. And I don't see why we should abandon that principle when it comes to insurance. So as I said, I do not have authorization to make any clear commitments, but I think I have enough authorization to say that we would stand up for our indigenous industry.
Let me just do something there. Thank you so much, Honorable Minister. Let me just see whether we can take some 2 questions or 3 questions for Deputy Minister of Finance before he leaves. So, audience, any question with respect to what government is doing for the sector, as government honoring their payments to the sector, especially the local firms, or what have you. If you have any questions in the crowd here, we can have it before the Finance Minister take leaves of us to Parliament to look at other duties. Any questions from? Okay, so you can bring the mic to him, and then you fire straight to the Minister or Deputy Minister of Finance.
Yeah, thank you very much. My brother said I should talk.
And you can introduce yourself and tell us.
My name is Tewia Ben Ahmed. I'm the Managing Director for Metropolitan Life Insurance. I seem to be the only participant here who believes that the conversation should not be about minimum capital requirement increases, because I notice that the panel is unanimous on that line. But I think that it is not the way to go. I'll just cite an example from Nigeria. Nigeria has done something which I think is of such national significance to the ordinary Nigerian. And what they have done is that they have made something they call group life insurance compulsory when they thought about increasing penetration. If I have the time to talk about the fact that recapitalization will not yield to growth, establishing that would, and increasing penetration, establishing that will not be difficult to do at all. Just go back to 2016 when we moved from 5 million to 50 million and measure whether the growth in the market premium compared to the growth in 2013, for instance, is high or low. And then once you talk about minimum capital increase, I think the conversation should be about what is the return on equity of the market so far, because you're asking shareholders to bring additional capital. So the conversation really, I don't think it's about minimum capital requirement increases. And don't forget, business units within the insurance sector and the shareholders have got their own growth strategies that may require them to, as it were, increase capital when they want to grow. So what I'm suggesting, or what I'm asking, is to say that it is important to have such a beautiful aspiration of improving penetration in the market, but how do you deal with that? Because the minimum capital necessarily will not result in the growth of the insurance market and penetration. What needs to happen, in my opinion, is to open the market for growth. And one opportunity that you can consider is to learn from Nigeria experience, where they make group life insurance compulsory. And I'm not promoting to say just create easy business for the insurers. I'm saying this is something that can help the ordinary Ghanaian family. And what group life insurance does is that it insures my salary for, say, 3 years or 5 years. And what the nation then is saying is that if you happen to move on, or if the policeman in doing his job happened to die through accident, the salary of this policeman is guaranteed to be paid by that insurance company to the surviving family for the next 5 years, so that the children of this policeman will continue to have their welfare taken care of. And on the other side, if the policeman, say, became permanently disabled and is unable to continue to work, then this person will continue to receive his salary. So there must be an opportunity to open up the market for growth. Because if you look at what happened in 2016, we likely created a lot of idle equity, which increased investment income, but not...
What do you mean by... What do you mean when you say open up the market?
Okay, so create...
Who should do it?
Okay, so create more opportunities. And I think that conversation is happening with the National Insurance Commission, which is trying to create more opportunities for growth for the insurance market. In Nigeria, you can have an insurance company doing only group life business, and that is big enough. So I think, for me, the conversation really will end at risk-based capital adequacy, where your level of risk informs the level of capital that you hold, and the minimum capital requirement that we have now is more than adequate.
Thank you so much. Can we restrict our conversation right now to some quick questions for the Minister of Finance before he leaves, so that if there are any issues with respect to what government has to play in this sector, he addresses it before he moves out. So any question for the Deputy Minister of Finance, please.
Okay. My name is Richard Ahula. I don't belong to any insurance company, so I'm not an insurance expert. But I just want to find out, apart from increasing the capital, are there plans of making some policies compulsory? We talked about the low penetration level of the insurance industry. I know people are doing motor vehicle because the motor vehicle third party is compulsory. He mentioned the group life. So are there also thoughts, or are there plans to also make some policies compulsory that will help in increasing the penetration of the market of the industry? That's my question.
Okay, let's take the last question and then we'll let the Minister respond. Any other question? I saw, okay. Edgar Radio, all right.
Thank you. Mr. Minister, Kweku, how are you? Good. My problem is very simple. If my memory serves you right, I think in your speech you did say that you're going to back the commission against anyone who tries to violate any portions of the law. I think I heard you say something like that.
Can you take your mic closer to your mouth, please? Yeah.
So you got it. You did say that in your speech. So let me ask you this. If the commission also decides to break the law, what are you going to do about that? Because currently they have gone around it. They've broken the law so many times, but nothing has been heard from the ministry. What do you say about that?
I think, can we do one last one and then he respond to the set of questions, and then so there's a lady here, gender balance, right?
Thank you. My name is Jifa. I work with Allianz. I think that it's just not enough for government to support the regulator in wanting to increase minimum capital. I think the industry will be very happy to note that government, as the majority spender, it's actually patronizing insurance. What is your thoughts? What is government going to do to help in patronizing insurance as an institution? Thank you.
So thank you very much. The Deputy Minister of Finance will respond to these set of questions. Honorable, over to you.
These are difficult questions. Well, I heard from MD say that recapitalization is not the most urgent solution. Maybe it may not be the most urgent solution, but I think the sense is that it is one of the things you have to do. And I do think that even if there were more potent solutions, this is not a solution we can overlook. And we have the liberty to do a couple of things so they would all bring the improvements we want. You make a key point about expanding the market. And it seems to me about expanding demand for insurance consumption. listening to you and the subsequent question, I get a sense that we want, maybe not so much you, but I think subsequently the point was made that we want policy to create the demand for us. We want somebody to compel free individuals in a democratic economy to create the demand. And we must go to the fundamentals of economics and ask whether that is efficient. We must, I'm not necessarily saying no, but we ought not to think that that is such a ready answer, because ultimately, if systems are not efficient, if we are not able to go out there and sell products in a way that is appealing to the natural instincts of consumers, and we are almost saying whether they like it or not, by law, let them like it. I know on the face of it, it sounds good. For classical economists like me, I'm always going to think about these proposals very carefully, because in the long run, they may not be the real solutions, and they could have a tendency to create unintended consequences whenever you try to do this. But I do agree that perhaps government standing unconcerned and telling insurance sellers that go and use all the mastery you can and get people to do it may not be the right thing to do. Government will need to engage, but we should be thinking about how we deepen the market in more natural ways. And if at all government is stepping in, government steps in to support. And I think that question, it relates closely with government consumption of insurance products. I would urge government to do so more as government being a law-abiding player in the market. That is how I want to look at it. Because in many of the areas we are really required to do so, and it's a bit uncomfortable, but I have to make the point that there are areas that government ought to be ensuring that at the moment we're not. So we ought to be compliant. But I'm careful to say that government come and consume products because insurance companies need business. You know, I'm not quite sure that is what you mean, but there's always a tendency to say, government, you are the biggest spender, so spend it on us. You know, spend it, spend some of it on us. I'm only saying that we need to engage and to guide government's intervention and the regulators' interventions very carefully, and look at the economy broadly. So I think on that point, and I guess it's an important point of this discussion about how we create a real, natural, credible demand. And on the one hand, we may say, let policy do it for us. But on the other hand, government would probably say, go out and make the case. Maybe the answer lies somewhere in the middle. We can find that middle. The Commission, return on equity. We should also be looking at efficiency. I have had discussions with players who are not here, and you know, we like to drive big cars and attend big funerals. And wherever we're talking about profit and viability of initiatives, we should always go in there and see whether the efficiency box has been ticked. So I again, I'm not ashamed to say I'm not an industry person. You understand it better. We're happy to listen to you on how we can make the industry more profitable and make it the place more attractive to people with capital, and government would always listen carefully, listen to advice, and do what we are required to do. But as I said, one of the things that we need to pay attention to carefully will be the efficiency and generally your risk management strategies and those things that the basic rules will say you should do. I guess if that working with an improved regulatory environment would ultimately lead to an industry where people will be more comfortable putting their money there because you can always be sure that you would get return on your investment. And then lastly, government will stand by the commission to crack the whip. That is not a policy matter. That is by law. I mean, by law, we are supposed to help regulators enforce the laws that we make for them. Where the regulator breaks the law, maybe somebody should get sacked. I don't know. We cannot have a single answer to this. I by my nature, I'm a disciplinarian, and I think that people acting in public office should act responsibly. If there's evidence that some of these infractions have happened, we can discuss them. And if somebody has to be punished, the punishment would go forth. So I have no hesitation in answering this question at all, that the law should apply both on the side of industry, but as in the same way on the side of the regulator. But I guess you may have specific instances that this forum may not be the proper place to. So we are happy to have a close discussion and to see sometimes it might not even require some open sanctions. There are always intelligent ways of ensuring that in the end the law is obeyed. That's what I can say for now.
Thank you very much, Kweku Kwarteng. He's the Deputy Minister of Finance. For those interesting thoughts, I understand you have to leave to Parliament, and he actually agreed to be with us for a short while because as a Senior Minister, Finance, and then Charles Dubois, they are out of the country trying to raise some money for a Eurobond in London right now. So thank you so much, Kweku Kwarteng, for your time. And ladies and gentlemen, let's show some love for him for his time being here. But the discussion would actually go on. We've just started. As you look at capital raising, is that an answer to the industry's problem? What do you think out there? This program is live on Joy 99.7 FM, and it's also on the JoyNews channel on Multi TV. And you can also join in this discussion. What do you think is the way forward? Should it be up, down? Should it be more of a risk-based capital increase? Or what about a tier system as well? You can join this discussion via our various social media handles. That is, Facebook is JoyBusiness GH, and JoyBusiness GH on Twitter, on Joy 997 FM, and JoyNews TV. And remember to hashtag the Joy Financial Services Forum and participate in this discussion. We'll come back to you as you roll on with this discussion. But let me get back again to my panel. And it looks like Mr. Nsiefri, you have some quick argument to make again about whether self-government now or self-government later.
Yeah. Oh, what I want to say is that we have 4 industry players. We have reinsurers. That is, when the insurance companies have risks, they sell portion to the reinsurance companies. Their business activities are quite different. Their risks are very onerous if we should crystallize. Then we have the life insurance companies. I've opened to table 14 of the market report. And the retention for life insurance companies.
Which year is that, sir?
2017.
Okay, thank you.
The retention, some companies even retain 100% of their premium. Let me read it. We have 87 for Vanguard, UT Life 95, Beige 89, Star Life Assurance 99, SIC 100%. So you see that here they retain every business that they generate in their books. But when we are talking of big business, we are talking about business where if the risk should materialize, it can collapse even the companies. Like oil and gas, billions of cedis. This is what I consider big business, not life of persons. So the capital requirements should be different. Like insurance brokers, the intermediaries, they don't bear any risk. So why should our capital requirement be the same as an insurance company? So from the point of view of life, if you are making a case for life, that yes, there should be increment in capital, but life companies should be looked at differently because there's a lot of risks of individual lives put together, isn't it? If that becomes the case, then I will agree with you. But a situation where we are retaining 1.87% of a risk, with foreign companies taking over what percentage? 98.13. And the reason is that you don't have the muscle, the capacity to underwrite such risks. I'm inclined to believe that. I'm inclined to believe, and I hold strongly to this, that yes, capitalization is required for us to be able to underwrite big business and retain a larger portion. And let me conclude by reading what Gokip even said. Recommendation for financial capacity building. There should be a clear roadmap to increase our local retention to 20% from 1.87 to 20% over the short to medium term. And they proposed how to go about it.
Thank you so much, Mr. Nsiafri. He's an insurance broker representing the Ghana Insurers Brokers. Let me get to Mr. Dabo. I mean, he's been there as a regulator before. I mean, often it's said that, yes, the law is there, but the reality on the ground. From the perspective of being there before as a regulator, capital has to go out. But do the industry have the capacity to meet this capital requirement so that we don't end up again letting some of the companies close down and let only the big players and the foreign partners be in the space? At the end of the day, they take everything away.
Yes, the fact is that even the recent increase we made in 2015 from 5 million to 50 million, the fact is that our companies struggle to make that 15 million. Most of them have to even fall on external partners to come and join them to make that minimum. The fact is that we may have a very good idea thinking that if you have 4 or 5 local companies with small, when that issue come up, they may come together to put resources to be one, to be strong, and add something. That never happened to Ghanaian companies. I want to own my own company. That is forcing them rather selling their companies to foreigners. That is the issue. I can foresee the same issue when it is increased again from this new level to another level, which all indicators in the economy pointed to, because there is a need for that. We need to build our capacity so that we can do some level of business to retain it so that we can also grow. If we are not retaining the business, earning the premium, increasing our net worth to employ more people, how do we grow? That is the challenge we need to face. The solution might be what KPMG also supported, that if that be the case, will it be possible to relate the increment to the level of risk you are carrying on your balance sheet, which is the risk-based approach? But my fear in that area too is that the level of risk they are carrying, it is not adequately determined. Adequately determined. Because when you go to the books now to see their reserving levels, the provisions they make for the claims and all those ones, and you actually go down to their database, you can see at a go that the level of reserves and liabilities they are carrying is not sufficient. Right. So that one is another big problem, which we have to solve. But definitely, I would say that yes, there is the need for capital increment, but will it be risk-based? If it is risk-based, the risk indicator we are relying on from experience on its own is not reliable. But how can that be solved? Professionals have to do it because, and I know our government and commission may not have the capacity to do that testing for all our companies to see whether their level of liability they are carrying is adequate. And you cannot hold the individual actuaries to account for it. They have that nice wording in everything which protect them already. You see, they know what I'm talking about because they will conclude very well. Every actuary in their report is saying that the level of provisioning or results you are carrying depends upon the liability and the records you gave me. Based on that, I arrive at that.
Let me bring in Mr. Robert Jato here. He's a senior manager, strategy and operations at KPMG accounting firm. What is stopping these firms from coming together? I mean, you engage them, you work with them. If it's a problem, I mean, if it's a thing about locals and all the rest, let's merge. You know, is it about the difficulty in merging or what?
Well, maybe we should speak to the owners of those businesses. The truth is that...
And they are here. We'll come back to them. Why are they not merging?
Reality is that we've seen in other markets where players come together to build scale, to do big business, as somebody mentioned earlier on. I think there's a mindset that I would rather own 100% of a small portion than own 10% of a larger portion. And I think that's a challenge. I don't know if it's cultural or it's just in our DNA. But maybe let's step back and look at what is capital. And if you think about it from first principles in business, capital is that which you invest in a business. And what do you invest in? You invest in systems, in people, in processes to make you more efficient. I think that if you go back to the penetration levels that we all talk about, if there's 1.2 and now that the economy has been rebased, maybe lower, then in my view, there's huge opportunity for us to grow the insurance business in this country. Question, how many of us are investing in data and analytics today based on, to begin to look at what's the extra opportunity in my customer base that I have today? How many of us are investing in the customer experience? Because we've done a research, and from KPMG perspective, we've done this across different markets. In Nigeria, we discovered that a number of our respondents said, I'll not take insurance, one, because of trust. Two, it's awareness, I'm not aware of it. Three, it's affordability. Four is access. So in terms of ranking, these are the key reasons they gave. The other things we found is also the religious and cultural dynamics, right? If I'm taking insurance today, it means I'm preparing to kick the bucket tomorrow. And it will be tight if you had a very stubborn son. He will just kill you first so that he can make a claim, you know. But the point I'm making is there's huge opportunity. How are we going to leverage and take advantage of the opportunity? Definitely we need to build scale. So if we step back to that capital conversation, before 2015, if you assume for a split second that the capital levels was 5 million in 2008, and divide that capital by the CD at the time, that gives you close to $4 million or maybe $5 million. Fast forward 2019, 15 million we have increased to. Divide that 15 million by the exchange rate today. What is that level of capital? Much lower than what it was. So if you think about some of the big businesses that we are targeting, the truth is that their parent companies require them, in our experience, to have insurance or underwrite their risk with AA-rated companies. Okay, so how many of the AA or resemblance of AA companies do we have in this country? We don't. So reality is that he needs to secure himself, but he can't do it with us. How do we come together? And I think that's a critical question you asked. How do we come together? I think there are opportunities for us to really, really come together. And there are different ways of doing it. In Nigeria, and I mentioned that earlier on, there are about 20 companies insurance companies that are at risk of maybe disappearing after the recapitalization. Do you really want to disappear, or rather you want to come together? It may mean that you lose some control, but I'd rather lose some control than disappear completely. It may be psychological if I'm addressing your question. It may be just cultural that we rather own a small pie or a big portion of a small pie than a small portion of a big pie, and that's psychological.
Let me bring in Mr. Nsiafri again. And for me, as a policyholder, what I care about is when it's due for the necessary payment to be made. I get it. Whether someone is capitalized $10 billion, $3 billion, some will say, I don't care. But also there's a concern that if these companies become too big, what would happen to those normal micro insurers and all the rest? Isn't that a fear that we should also look at? In the banking sector, there have been issues where some banks have become so big that they've actually not given the retail customers any room to deal with them. Isn't that a concern here as well? As a broker, you deal with these guys every day.
I seem not to have an answer to your question. What I can say is that yes, every insured will want his claim to be met and met promptly. And the insurance industry said that no matter the size of the company, they can underwrite every risk. Only they can underwrite it, but they will cede a greater proportion of it to reinsurers, and these reinsurers are mostly external companies. Insurance is international. Risk is spread all over the world. It may interest you to know that even a Ghanaian risk may be in Japan, in UK, US. I have colleagues who have been doing this. So if you have a good arrangement, reinsurance arrangement, you can insure every risk. But what we are talking about is that the capacity to underwrite the risk and retain a greater proportion of it in Ghana so that we protect our market, we develop capacity, technical capacity, financial capacity to rub shoulders with the big boys all over the world. That is what we cannot do. And there are certain things if you don't have capacity, you can't do. When it comes to even training your staff, it may interest you to know that a lot of companies will send their staff to these big boys to train them for them. If they have capacity, that is something they can do internally. But the small companies can underwrite the business and pay the claims because they reinsure, and when the claim materializes, they call on these reinsurance to repatriate the funds for them to be able to pay the claims.
Mr. Davo, I'll bring Mr. Davo in, and then I'll open the discussion for our audience here to also ask their questions and their contributions as well. Remember, this program is live on Joy News channel, on Multi TV, and also on Joy 99.7 FM. You can participate in this discussion via various social media platforms. Facebook is Joy Business GH, Twitter is Joy Business GH, and also on Joy 997 and Joy News on TV. Remember to hashtag your comment, the Joy Financial Services Forum. Do you think that the capital should go up, should stay risk-based? Why don't you join in this discussion? Mr. Davo, what about those? Some have argued that maybe let's concentrate on the governance issues first before we do the capital, because if you don't deal with those inherent issues and the cutting, the structure, governance, it's like pouring water into a bottomless pit or something.
Yes, you are right. Governance that's why at my initial remarks I said that I am sure the ground has been prepared for the capital to be brought to a certain level to benefit the populace. Yes, governance is key, but that governance alone, the most important aspect is with the insurance companies. We need market discipline, and then secondly, the structures have to be put in place by the regulator to make sure that those things are done. But as far as I am concerned, a lot of those governance issues has been addressed. They came out with a new governance and risk management framework and a code. They issued all those ones. If implemented, I'm sure it will benefit all. But what I consider most, which also have to be in place for this capital to reach the appropriate level, is what I can describe as market discipline. The operators of the market have to discipline themselves in terms of claims, payments, in terms of premium levels, because they themselves, they said they are not growing. And you need the premiums to grow. And they will go under the ground to even accept a lower premium for a higher level of risk. How do you grow if you cannot even do the right thing to increase your premium? Meanwhile, you know that it is that level of premium that is needed for you to see whether you are growing. Most of the companies are making losses just because they cannot generate enough premiums. You are not generating enough to cover your administrative expenses, but you have the, I don't know how I can describe it, to cut the premium again. How do you survive? That's why I'm saying that if we are not careful, the losses they are accumulating now, the new capital increase will only come to absorb those losses. So that's why we need that market discipline on the part of the operators of the market, the companies, for that. We've coupled with that level of administrative structures put in place, like the corporate governance and risk management framework issue, they go by it, the new prudential and financial reporting guidelines issued by the Commission, which if they all implement those issues to the best or to the latter of what is provided, I'm sure with the needed capital support to boost their capacity, they can go in for some appreciable level of business. I will not say a big level of business because insurance, as you know, is international. You cannot do much. If you take our oil business, it is recently we are heading towards 2% of what we are taking. Because when we started in 2010, when the first FPSO was insured, $1 billion, we were able to take less than 1%. All is gone before we come to 1%. So if that 1%, we can boost our capacity through the capitalization and use the capital well for what is required. And the capital, you don't need it for that alone. Most of the companies now, you need the capital to get the right technology to operate. It will not be surprising you can have some companies in Ghana today still using spreadsheets for their premium calculation. How do you want to level your leverage on the international level? And it's a fact. So you need capital to get the most recent IT facilities to operate. So if all those issues are addressed, governance matters are addressed, risk management well taken care of, with the needed support of capital, I'm sure the growth and the penetration we can be aiming towards, if not 3% in the next 10 years, I'm sure it will be appropriate.
Maybe the actuaries are quite expensive to get, but I'll try to open the discussion now to our audience here in terms of contributions, in terms of questions, and what do you also think. But so anyone who wants to make a comment can raise his hands and all. But one quick question that I also want to throw back to you as a broker is about a very controversial issue, that the premium levels, some are saying that it is quite low as well. Where do we start from? Are the policyholders prepared to pay, or?
I'm of the view that you want to be indemnified. That is to be restored to the position you were in prior to the loss. And if that is what you want, then you should pay a price. And the price is the risk-adequate premium. In fact, in Ghana, like the former Deputy Commissioner was saying, seems there is a lot of undercutting. We are cutting our noses to spite our faces. That is a premium, a business that we took, let's say, 1,000 cedis last year. Somebody can offer you pay 800 for the same risk. And when the claim materializes too, they want to be indemnified, the same amount. If it goes that way, then it means we are taking less for the same risk. How do we reserve so as to grow and to be able to pay the claims? That is why some claims, some few insurance companies find it difficult paying claims. So if it's a service we want, then we need to pay for it. And I think insurers are prepared to pay. If you can buy a vehicle for 200,000 Ghana cedis, and you have to pay about 10,000, would you say the 10,000 is expensive when you've bought it for 200,000? I don't think so.
The last time premiums were reviewed, it wasn't that good on the market. Even now, asking people to pay for certain levies for their vehicles and engine types has been a very, very debatable issue. But I'll bring you in, the gentleman from KPMG. But let me open the floor now for contributions and questions as well. Remember, you're live on the JoyNews channel, Multi TV, and Joy 99.7 FM. Mr. Edgar Redu.
Well, thank you. Unfortunately, I think we've got so many angles to what has happened. Listen to our, big men up there. But I think that there's a popular saying in Ghana today, and that is, if you get the fundamentals wrong, something would actually expose you. What is the topic? Recapitalizing to grow, a panacea for expansion, penetration, and big business on the right end. The topic itself is faulty. You don't recapitalize to grow. It is when you are expanding, when you are growing, that is what brings about recapitalization. And the idea that recapitalization will put you in the position to underwrite good business is also faulted. I think when Mr. Davo was speaking, he explained the issue clearly, and I think that is where the focus must be. In insurance, there are three forms of capital. Your recapitalization, not even recapitalization, we are talking about the main capitalization, what you are kicking off with. And what you are kicking off with is liquid. Capital is liquid. It's not the investments you've made in the equipment, the technology, and what have you. Having done all that, now you need that minimum, which is liquid money, because that money is supposed to be the one you're going to use to run your day-to-day activities. That has nothing to be in your backbone account. Number two, let's get to understand one thing. You need a certain level of reserves. Sadly, all this talk that has gone on, nobody has mentioned the reserves. It is the reserves that actually positions you to stand and say, I have the capacity to do X, Y, Z. That is the most crucial thing. Then the next thing is you are talking about your deposits. The deposits that you have, at what point in time and what investments? Is the deposit with the central bank, or has the central bank decided to send the deposits to any of the commercial bank, or decided to loan it to government as part of their road shows? What interest is coming on those deposits? These are all part of the building of your capacity. Let's get it clear. Recapitalization is liquid money that you need for your day-to-day operations. It's money because you are not supposed to touch the premiums. The premiums are not supposed to. They must go into straight investments. And as my brother did say, for instance, you've picked up some huge business. How much of it has gone out there? A lot. Today, you have been made to understand that T3, that is Terminal 3, Kotoka International Airport, is around the figure of 270 million. Put everybody together. Put everybody, even put the banks. The banks are talking about 400 million Ghana cedis. This we are talking about 270 million US. So even how many of the banks can hold on to that if there's a big disaster? Let's get the fundamentals right. And when we get it right, you must understand that your failure to recapitalize does not result in you being expunged from the books. The law does not require that. The law is very clear. If you are not able to recapitalize, there is something you do. And all over the world, when companies are not able to recapitalize, the commissioners sit up and put in strategies how they can get to that level. And we rightly said, it is not fixed. It's not fixed standard, as you are trying to do here. It is not fixed standard. It is stated clearly that you have to do it based on something. And before you can start that process, you must get the actuaries to go into the books of everybody to determine, for you, this company, based on the way you have expanded, based on your business proposals, based on XYZ, this is the capital that is set for you. You cannot put it at 15 million, 16 million, 30 million as it's been done. And as I said, the most important thing is that I would have appreciated if you had said that let us look at the reserves. It is your reserves that makes you solvent. Your reserves, your deposits. If you have asked that, let's go in there. But there again, there's a problem. As Amatevia said, you are talking of shareholders. You know why outside they grow? They grow because they don't believe in, I want to be known as the wealthiest person. It is my business. I must have a fat bank account. Outside they don't believe in that. They believe that money should grow. So at the end of the financial year, when your profits are determined, you ask yourself, how much goes into the reserve accounts? Do you boost your reserve account, or you think that the profit has come, so shareholders let enjoy the money? So invariably, we are not getting that in. But let's get it clear again. As I said, this thing is wrong.
Mr. Reddy, just a quick one on that. What we have with the topic is a question that we asked. We're having a debate, so none of us here is making a definite statement that we have to do X amount of capital.
No, I don't have a problem with that.
So it's a question, we're having a debate.
No,
and that's why the view of yours is...
I understand that, but I'm only saying that the way your question puts it, that recapitalization...
It's a question. If it's a question, it's not definite stuff. We're still throwing it out.
What I'm saying to you, you don't recapitalize to grow, but it is when you are growing that you recapitalize. That's the point I'm making. You see?
That is your point, and it's well noted. Thank you so much.
It is not my point. It is the fact. You can check from. I mean, don't say it's my point.
No, I believe that you're making a very genuine point, and it's well noted. So thank you so much. Let me get back to Mr. Davo, please, and just to get some clarity. Being a commissioner before, what does the law say with respect to recapitalizing, and what happens to if, George, you have insurance and I fail to recapitalize? What is the rationale from the law, the spirit and the letter, with respect to recapitalization?
Yeah, the current situation is that the minimum capital is clearly stated in the law. But there are 3 other sections in the law that give the powers to the authority to do anything in the law they deem fit. So if you want to go strictly according to the law, we should still have been only the 1 million which was in the law, which is the capital per the Insurance Act. But some sections give the powers to the authority, looking at the financial conditions of the industry, to come out with a new minimum. That one, you cannot follow them. And based on that, you can use it by regulations or by directives and all those ones to increase the capital.
But is that clearly stated in the law?
Pardon?
With respect to that room?
Yes.
To review
the
capital.
Yes. That's why it is done. And we use that that's why we issue a directive and regulation for that one to be changed with the approval from the sector minister.
What about, again, what the law says on the rationale or the need? Does it give room? And sorry, and that goes with a very valid point there, where, for instance, every 5 years or every 10 years, there might be the need to review the capital.
There is no specific time frame for it in the law.
Let me bring him a sense here. Yeah, I'll come back. Just want to make a quick point.
Something I want to explain here. This is a document from NIC. What constitutes the capital and what to be accepted? I want to read. Additional capital introduced by existing companies to meet the minimum capital requirement can be 1, cash. 2, audited profits. 3, revaluation surplus will not be accepted. That is, if you have an asset and you think the asset value is low and you call valuers to value it, they increase it. That one, the surplus cannot be added. So in effect, when we are talking of capital, we are not talking of the stated capital. We are talking of stated capital and the reserves. So I'm answering the question he raised. So it is not that you say you are increasing it to 50 million. So everybody, if you have paid 50 million, everybody should bring 35 million. No. Your operations, if you've been operating and you are profitable, by the time probably you are supposed to reach there, you might have even passed there. For example, the companies that have already met, some companies have already met this threshold. 11 companies have already met this threshold. So they will not be, the new proposal that the commissioner brought. According to
I would come back and I'll bring the mic again to the, I'll come back to you as well hold on a little bit, the level of engagement with respect to this capital requirement. Is it more of a fiat, a student headmaster, this is it, or there been a lot of engagement that has gone on in the industry for all of you to raise some consensus or compromise that this is the way to go? Let me throw the question again back to the audience here. Your name and where you're coming from, please.
My name is Seth Aklasi. I'm a practitioner. As a matter of fact, I wouldn't be able to answer that question with respect to the level of engagement. I think there's been some.
Because if some people have already met it, then what happened with that? Sorry, go ahead.
Okay, all right. I actually have been listening for this period, and I just have a few questions to all the panelists. The gentleman from KPMG mentioned that he thinks that the capitalization is a good thing because there are some big players who only want to insure with AA-rated companies or so. But the fact is that, first of all, which company in Ghana can be A-rated when the country itself is not an A-rated company? The second question is that, okay, we are talking about capital flight. Capital flight is basically based on the principle of insurance, which allows us to reinsure. But then if we are reinsuring and then it's going outside of this country, what have we done to basically encourage reinsurance companies to come set up here so that they take the risk locally as well? Have we given any thought to that in the various discussions? The final thing I'd want to say is if you look at this country and then we are talking about penetration, as a practitioner standing here, I don't even know what the penetration is all about. What do we achieve by having a high penetration? If penetration is relevant relative to GDP, and the GDP keeps growing, and the number of insurance people buying insurance is the same, it's a direct relationship. So why do you want to increase this thing, penetration? Finally, my senior man over here, Mr. Efrie, gave an example of the issue of the amount of the oil and gas business that is retained in Ghana. His data is a bit outdated, 2014. This is 2019, and I think that in recent years, we have actually increased some way, somehow, the participation. But then what he's forgotten to add is that there had been claims, and some of those claims, can we imagine that if one FPSO is actually 1.3 billion, that's only one. If it goes down, can this economy afford to pay $1.3 billion? Those are some of the questions we should be asking.
Thank you so much. Let me bring in the gentleman from KPMG to some of the issues that were raised.
Thanks. I think the conversation, and I did mention this much earlier, is not about whether we need capital or not. I think that point is made. In responding to AA-rated, it just means that that's the policy position of some. You can't do anything about it. So, yes, we can increase capital, but it wouldn't necessarily stop that premium flight. But there's some element of the work that we need to do in terms of building scale locally to be able to, for those that don't necessarily require that requirement, and it's purely down to capacity of you being able to absorb the risk, we can take advantage of that. I think also that, again, back to the topic, would recapitalization help us grow? To some extent, yes. Let's face it. The truth is that what are you recapitalizing? When you have that additional capital, what are you going to do? You either acquire, you either invest in improving systems. Because I mentioned earlier on, trust is a fundamental issue. Today, I have X number of insurance policies with a number of maybe companies. And we've done this research speaking with a number of customers. The truth is that their biggest issue is not about taking insurance. It's when it comes to the claim side. That's one. The second thing is the relationship. Until my insurance policy expires, nobody is looking at me as a customer and looking at my life cycle, what has happened in my life. And that comes with some investment into data and analytics and having systems that allow you to be able to touch the customer when it most matters. Who doesn't want to protect his wealth? And the way I look at insurance is a love product. If you love yourself, you take it. Because if I have a car and I love my car because it helps me go to work, I want to protect that. If I love my children. So I think insurance is one of the easiest things to sell. I'm very surprised when people say that it's hard. And I'll tell you why. I used to sell insurance, and I've sold all kinds of insurance policies, and I've sold pet insurance. Today, how many of us actually have any solutions around pet insurance? If my car breaks down today on the motorway, how many of my insurance policy or insurers would readily come to my aid? Two, if I'm traveling outside of this country, typically, depending on which country you're going to, they require you to have some travel insurance. So I do maybe travel twice, maybe thrice a year outside of the country. Maybe that's when I need insurance. But I travel on the road every day, on the motorway every day. Is there that possibility of me? And I see accidents every day on the motorway. Sadly, are there things that allow me on my mobile phone anytime I'm going to travel to pay at the point of when it becomes need? And that requires investment. Today, there are more mobile phones in this country than human beings. How are we leveraging that? I think the Deputy Minister talked about efficiency. To be honest with you, I was reading a report this morning, which is a KPMG report, global report. Operational efficiency is a key because our insurance premiums are low. The only way you can make revenue and then convert part into retain earnings to meet certain requirements is to be efficient. How much are we investing into that? So I think that, yes, recapitalize, but it may not necessarily be the only answer. There are things that we need to do around product innovation, investment in systems and people, and definitely, I think that we need some financial education into our strategic model as an insurer. You really cannot say that I'm just selling when the people are not aware, when people need education. Because we really need to personalize this, and that requires investment.
Robert Jato is a senior manager, strategy and operations at accounting firm KP. Interesting marketing advisor for the insurance company. So, but let's do quick 3 questions, and then we come back to the panel here. You can identify who you want to answer your question for you, please. So let's get back to the audience. Edgar, I'm going to come back to you so that let's do that. So let's do some 3 questions, and let's get back to the panel. Let's try the other side, and we'll come back again to the MD, please.
Good morning. My name is Apia Adomakon from CATS. We are a research and a policy think tank, and we've been conducting a couple of researches in the insurance sector. And I think that the picture is not the best. The net promoter score, that is, there are those who are against insurance in Ghana are more than those who are for insurance. And if we want to look at recapitalization, I think we need to look at the system first to make sure that the system is healthy before injecting hemoglobin into the system. That is number 1. And then number 2, I also think that we need to also look at the 3rd side. That's the supply side, the demand side, and the regulatory side. I think that we should start from the regulatory side. NIC needs to do more. I mean, I don't know the last time NIC is taking on an insurance company for not meeting their claim. On the supply side, some insurance companies, when it comes to a point of claim, then they want to pull out certain terms and conditions which they didn't make known to you at the time of signing on. And this is kind of, taking people's interest in the sector. And so we need to do more on other side. And I think that if we are able to whip consumer interest in the sector, I think that even people can even go to the extent of what? Ensuring their relationship, because they believe that if they lose their spouse or their marriage breakdown, insurance company can also help them in another search for getting a spouse. This is on the lighter side. But I've also seen something in the sector. I am a competition economist, and I want to see competition in the sector. Last 3 years or 4 years ago, when after the June 3rd disaster, insurance companies came up with charging a flat rate for motor vehicles. And I think that in a functional market, let prices to be determined by individual market players than saying that if you are insuring your third party, this is the flat rate. That is anti-competitive. I don't believe in price fixing. Let each industry player decide to choose how he or she wants to sell his or her policy. And finally, if we want to do the recapitalization, I think it will be best for us to hold on for at least 2 more years and do more and make sure that the system is healthy before putting in more blood. As it's like an anemic person who is also suffering from cancer. Let's treat the cancer first, and then before we give the person hemoglobin. Thank you very much.
Thank you very much. The situation that bad, distinguished ladies and gentlemen. We are live on Joy News Channel, Multi TV, and Joy 99.7. You can participate in this conversation if you are out there through the various social media platform. On Facebook is Joy Business GH, Twitter is Joy Business GH, and Joy 997 FM, as well as the Joy News on TV. And also remember to hashtag your comment Joy Financial Service Forum. Edgar, let me come back to you.
Unfortunately, Mr. Davo, that was why I threw the question to the minister. NIC has over the years assumed they have some powers under the Act. They don't. They normally quote Section 204, and to my understanding, they don't even understand Section 204. Section 204 deals with market conduct rules. Till date, they have failed to bring the market conduct rules, and anything they want to do, they go and quote Section 204. A typical case in question is this. Capitalization is under Section 69 of the Act, and it is stated there clearly that you only do it when you realize that the insurer is expanding. So it is not a cut-across thing. It is stated clearly under Section 69. Anyone who has a Google, you can go through your phones and look for the Insurance Act, and you see it clearly there. So you don't sit in your office and then at a strike of a pen, everybody should do it. It's totally wrong. Number two, as I said, you are not supposed to be expunged from the register if you fail to meet that capital. It is stated clear under subsection 5 of the Section 69. It tells you what you do. Oh yes, it's good. I think there's I think, Mr. Zia, you have the act today. Yes. Section 69. If you can kindly read it out for us to see it.
Would you permit me to do so?
Oh, of course, it's very important. Oh, no, you see, we're making a point here.
Okay, so Edgar, just wrap up with your contribution or comment, and then we come back to the panel.
Yeah, no, I'm saying no. It will help us go further. So let him read the Section 69. So as I said, don't get your fundamentals wrong. Get the basis.
Yes, of course, we tried having the commission here, but...
yes, so that is why we're saying that. So you see, if you don't get it right and you start talking like this, your principle is wrong. The law says that under Section 69, Mr. Chef, you can read it. It says, when you realize that the insurer is expanding, when he is growing, then you go and do an assessment and then decide the capital that he needs. You don't just get up and say, I'm waking up and everybody should go and pay 50 million.
So everybody is fine. Okay, thank you so much, Edgar. Can we have another contribution?
Okay, thank you very much. I think that, first of all, when I listened to the video of the National Insurance Commission and the commissioner talking, we can only but acknowledge that the NIC is doing a great job through the commissioner in as far as the efforts of increasing the minimum capital requirement is concerned. I don't think we can take that away from him. In fact, I was very pleasantly surprised when I listened to him and say, you can't just increase capital, you need to do industry engagement. And I think that is the best you can hear from a commissioner, and therefore we should give them that. Now, my final comment probably, though, is about, is following up on senior, man in the brokerage sector, using the example of the oil and gas sector to buttress the point of minimum capital requirement increase. And I will emphasize minimum capital requirement increase. Minimum capital requirement increase, as you know, if it gets increased to the number we don't know, the commissioner said is not finalized yet. We need to have discussions around to what extent will minimum capital requirement increase result in an increase of retention of insurance companies in Ghana. And for those who don't understand what I mean is that if for any business that is written by an insurance company, which is a risk business, a part of it is retained by the insurance company and a part of it then gets reinsured to reinsurance companies. And what that means is that in the event of a claim, if the amount is say 100,000 and the direct insurer retained say 10,000, the 90,000 will be paid by the reinsurer in order that the client can be paid 100,000. That process means that the insurers are leveraging on the equity of the reinsurers, and which is a peculiar thing to be considered in as far as capitalization or minimum capital requirement increases of insurance companies are concerned. Now, my own view or personal view is that conversations around minimum capital requirement or the level of capital of insurance companies should be linked to the level of risk that the insurance company holds. And therefore, if my level of risk is X, then my capital should be Y, which then speaks somehow to a risk-based solvency framework, and then you are also checking on the capital adequacy ratios. So I think that the conversation is really limited if you look at it from the perspective of minimum capital requirement increases without looking at the broader picture of how much capital should I hold relative to the risk that I am carrying. And I think that is what the broader conversation should be. The other legs to do with corporate governance, risk management, I think has been overemphasized. But risk-based capital regime, I think, is the way to go. We increased minimum capital in 2016, 3 years after we are doing another one. So I think risk-based capital regime then leverages this, and we don't have to be doing this.
Mr. So let me just take one last question or comment from the lady, and then we'll come back to the panel.
Hello, good morning. My name is Nani Fua. I work with Glyco, and I want to issue a disclaimer because these are my own views, because that's an official mouthpiece of Glyco. These are not Glyco's views. But I just want to make this comment that when Mr. Davo was speaking, he talked about one fundamental issue about market discipline, and that needs to be in place for any discussion on recapitalization or whatever needs to occur. So maybe the whole recapitalization issue is a bit premature. And I think it ties into what the commissioner said when he said that last year, this was announced last year, but we've seen in 2019, this hasn't taken place. And in the commissioner's address, he rightly said that there's a lot of stakeholder engagement going on to ensure that when that announcement comes, whether it happens this year or next year or whenever, then the necessary steps have been put in place. And I'm sure one of those steps is making sure that we are disciplined as an industry, first of all, to ensure that if there's even the need for recapitalization, that it falls on solid grounds for efficiency to happen in the industry, so that at the end of the day, what the policyholder needs best, which is getting his claim paid, is attained. So I want to make that comment. And I also have two comments, even though the Deputy Minister of Finance is not here. There was one key thing he said in his address when he said that when you look at developed countries, you have penetration well above 15% in that regard. But when we look at penetration in Ghana, and he even clearly stated in his address, we looked at only life and non-life insurance. In developed countries, pensions, health, all come into penetration. So what is the government doing to making sure that all these composites that forms the basis of insurance is taken care to us to address the penetration issue? Because if we only restrict penetration to life and non-life, then I'm afraid we are not going to get anywhere. The other point you also made when a question was asked to the fact that the government is the big spender, and what is he doing? And he clearly stated that the government can use compulsion to ensure people getting insurance. But we've seen the government doing it in the pensions regime, where, because pension is so important, they've introduced a three-tier approach to ensure that when anyone goes on pension, at least their funds are protected. It's the same thing when it comes to insurance. I mean, if you pick group life insurance, if you pick life insurance, and all the other insurances we are talking about, until we begin to see value in that, we will not achieve the value that insurance needs to achieve for the policyholder. Because if you ask me, I would want to spend my money anyhow and not thinking about the future. But where the element of compulsion comes in and helps the individual to make that necessary commitment towards something unforeseen, then we begin to see the value in it and appreciate it when the unforeseen circumstances happen. So the government has a lot to do in that regard.
Interesting. Let me get back to my panel. Mr. Davo, quick response to those set of engagement or concerns that have been raised by the audience, and then I'll come to Mr. Jato from KPMG.
Yes, it's a genuine concern, but the issue is very straightforward. In our environment here, implementing the risk-based approach to capital requirement should be the ideal. That's why they came up with the risk-based capital framework, the risk-based approach to that one, solvency. Right, but what I can say is that that level of the minimum solvency capital determined, it was determined over some period using some parameters to arrive at that. But looking at the rate of growth of the Ghanaian economy and the level of the operational level of the insurance companies as they stand now, if it should be linked to the risk-based approach, then there should be a revision in that risk-based minimum capital determined in that framework. You know the amount. So there should be at least some level of increment in that risk minimum there before you can relate it to your risk level. Though we all agree that that would be the best approach to determining the capital levels. But this is the situation where the whole industry is very small. So that capital being introduced will not only be there, will not be used to let the industry grow. Because that capital, when introduced to me, I agree that that capital introduced will not let the industry grow. But you need it to start operating at a minimum level, at some level, because we all know to acquire even a good software, you need capital. You need something. So where you are operating now is very low. You can just imagine the whole insurance industry. In your 2017-2018 account, you said the total profit of the whole industry is less than the profit of one bank because a number of them are making losses. If you are making losses, what level of capital are you to introduce before you reach that level? So yes, I agree, it should be risk-based, but that risk-based have to start from some appreciable amount. And that appreciable amount is definitely not the 50 million we are now. So there should be a revision.
Thank you very much, Mr. Simon. For this is the Joy Business Financial Services Forum on insurance. I'll be coming back to you. We have to sign off on radio, but we're still live on the Joy News channel on Multi TV as you look at recapitalizing to grow, a panacea for expansion.